All right, good morning, everyone. It is 9:04 on the morning of September 1st, 2022, and this is my pre-market strategy session. So, I put some lines on the Qs yesterday, and they're basically the high and the low, or I should say the open and the close, actually, of the previous day. Here, you can see here on the, let's see, the 30th, that the open was at roughly 306.10. Sometimes the opening price on the charts is different from what is on my brokerage, my trading system. So 306.10 is what it shows on the charts. I believe it's different if I go back and I look at my history on my level 2. I believe it's different, but in any case. And then yesterday's or the 30th's close was at 301.02. And yesterday, it definitely, so this last portion of yesterday's candle right here, this sort of back half, really happened in the last 10 minutes from 301.02 to 299.27. Here, check this out on the 10 minutes. So here's the last 10 minutes of the market right here, this red candle right here. And the close, it closed really, let's see, I guess it closed just above the day's lows right there in the last 10 minutes. And so the majority of this daily candle right here, the majority of the bottom of it really happened in the last 10 minutes. I mean, it did go that low previous. The 230 rally, that's actually 240, but usually in the afternoon, in bullish markets, after 230, it's when institutional buyers come in, especially at the end of the month. Well, anyway, the action was down here in this price zone yesterday, prior to the close, but it would have been a candle wick on the bottom rather than a solid red bottom like you're seeing here on this candle right here. It would have been a bottom candle. It shows a little bit of support, even though it's a down red, so on and so on. At least in that day, it's showing no support. And in fact, this morning it's gapping down. Price action is gapping down. And so we got pretty much what I was talking about yesterday. The high end would have been 306.10. I've been looking for resistance there big time. It didn't come up and test it. It did break down below the 301.02 I was looking at, and then leaked down below it, and then tried to fight to get back above it before the close, and it failed away. And so here we are gapping down, and this is the weakness that I was really kind of expecting. I did expect this move here to look a lot more like this move over here. So let's see, get all that stuff out of the way. So I was looking at this region being a lot more similar to what this region looked like, but it's not really. It's sort of playing out that way. It is just as bearish. Let's in percentage terms, let's take a look at what kind of price drop we've gotten here in a few days. So we'll go from here, this open to this close. That's an 11% drop. So let's go again from, let's call it this day right here, this kind of first gap down to down here, 8.28%. 11.28% versus 8.28% drop there. I think that this actually has quite a bit further to go. Nothing happens. Well, the old saying is that stock prices take the stairs up and the elevator down. And so this price momentum really could pick up here pretty soon, and it's the Qs right now are opening below. I have price support here, roughly in this area, and price support is below that area. Actually, let me make a better line there. Let me do it this way. We've got some price support somewhere in the neighborhood, in this neighborhood. Let me change the color of that. Change it to orange. No, that's not a very good color. Change it to hot pink. I don't like that color either. All right, we'll do that one. It'll make it a solid line. Yeah, so we're below the support and resistance sort of price zone that I was looking at earlier, just earlier this week. Yeah, I went right through it, and so then the next spot. Yeah, I mean, you know, let's draw some more lines here. The next spot I'd say is this close, the day of the 24th of June. Yeah, we're headed toward I'd say 294. The high 294s is where we're headed today. Will it happen all in one move, like after the open or something? I don't know. Just to have something to trade against, though. Here, I'll move this one. I'd expect if the Qs get back up to 299.27 today, I'd be looking for a couple of scenarios to happen. If it gets above 299, look for it to break above. Actually, let me get off of the daily chart because it doesn't do as well for drawing. So if suppose in the morning there's a whole bunch of short covering, people taking profits on their shorts, and it hits this area, I think the buyers, the folks who are taking profits, will get worn out right here. It's most likely it's going to come back down. Might retest and come back down. This is what I think is going to happen. Most likely scenario is price either gets close to the line and fails, or it gets above the line, comes back below it, retests, and then fails. These are the two most likely scenarios. So right around this 299.27 is most likely a good spot to press the shorts. Now, with that said, there has been over an 8% move between, what did I say, like the 24th of July, or I'm sorry, the 24th of August until today, something like that, or over a span of 7 days. Let's look at it again. Let's go over here and look at it again. Since the 16th of August. Actually, I put it on the 19th of August. So in a matter of about 2 weeks, there's been a negative 8% move down. It's really quite normal, that after, you get a significant move down, you get, at least a relief rally or a move up. So there is the other scenario, which is that the Qs pop above, catch support, and keep moving. So in the market, I don't know I haven't looked at what the sort of, there's a weighting of shorts and short options and so on, or put options, I should say. And so I don't know what that weighting is right now. I don't know how lopsided it is. And some of it does depend on, Wall Street banks or Wall Street brokerages really will do the best they can in order to push the market into their favor so that it causes maximum gains, which is max pain for the retail and max gain for Wall Street. So, it's, generally speaking, I'm still looking for bearish setups. And actually, you know what? Look at this 10-minute candle. Oops. Look at this candle on the last 10 minutes of the day. 710,000 shares of the Qs were traded in the last 10 minutes, and the next highest candle is at the open, and that's 300. It's twice the open. So, yeah, the pros close and the pros are selling. So, I'm looking for more. Still looking for more short opportunities. Let's see, the 10-year, the 2-year popped up a little bit. And again, the stock market doesn't really start to crash until the 10-year normalizes. So go back here. This is where the 90 crash started, and it's where the yield curve really started to normalize. Again, this is the 10-year, 2-year spread. And so again, the 2001 dot-com bubble, it crashed after the yield curve started to normalize. It was inverted leading up to that for, I think, a year. Yeah. Then 2007, the crash started on June 1st, or in June in 2007, and that's the date that the yield curve started to normalize. It was inverted. It did pop out. It did start to normalize back here, and there was a dip in the market back here, but then it dipped back down again. And this is, I think, 18 months between when the yield curve inverted and when the market really started to crash. And so then a bit of an anomaly here with 2020. So it really started to crash in February. It inverted back in September of 2019, and in August of 2019 started to normalize, then started to come back down again, and then really normalized, and now it's headed right back down into negative territory. So a pretty big move down here, and just looking at the chart of the spreads, there was this big move down here, a little bit of consolidation, actually 2 months of consolidation, and then another sweeping move down. And now I imagine we're probably going to get another couple of months of consolidation before another move down, which would be record breaking. So far, the biggest delta, negative delta, is 0.699, according to what is on this chart. Now that could be just a little bit short-sighted. This is from, I think, goes as far back as 1988. So negative 0.699 is the biggest delta between now and 1988, roughly, the year of 1988. I'll just go back and look. So, yeah, so this chart goes back as far as February of 1988. And so as far as this chart goes, now there might be something historically, deeper, but it's not, it hasn't been over the past 34 years, since 1988. All right. Dollar is definitely showing strength here. Dipped down, hit the bottom of its risk range. Now it's popped through the top of its risk range, which means the top of the risk range has changed. I just haven't updated it yet. And popped up there, consolidated, and is now, it looks to me like, in the process of starting its next leg higher. Which that's, higher dollar means lower stocks. More dollar demand means less liquidity for the stock market. So yeah, it looks like if it doesn't happen today, I imagine that we're due for the next leg down here today. Next red candle is on its way today. Just a guess. I'll be playing relative strength, doing the relative strength strategy anyway. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am